Ladies and gentlemen, we begin now with the second panel discussion, and the topic is Fintech and Digital Public Infrastructure, Unlocking Value Through Scaling and Monetization. May I now invite the panel of speakers for the session. Ms. Shalini Warrior, Executive Director, Business Head Retail, Federal Bank. Mr. Suvendu Pati, CGM, Reserve Bank of India. Ms. Lalita Natraj, CEO, NPCI, Beam Services Limited. Mr. Rajiv Ahuja, Executive Director, RBL Bank. Mr. Nitesh Ranjan, Executive Director, Union Bank of India. Mr. Kalyan Kumar, Executive Director, Punjab National Bank. And our moderator for this session, Mr. Anurag Chadda, Partner, McKinsey & Company. Okay. Over to you, Anurag.
Thank you. Thank you. Very good afternoon to everyone. I think we have a very interesting panel discussion. I think I was discussing with a few of the panelists, it's a very intuitive one, very close to the heart of most of the bankers and the fintech community here. The session is on Fintech and DPI, which is digital public infrastructure, and how do you truly unlock value and monetize as we reinvent the business model. At the outset, I think we have been discussing a similar topic for the last 1 or 2 years, but usually it has always been, okay, how do you kind of collaborate or compete with a fintech? Do we use them? Do we compete with them? It's very clear that I think fintechs and DPIs are kind of here to stay, in fact, accelerate and enable the banking ecosystem in some form. Also, this is a big emergence of DPI in India, I think the path that we are taking. So a lot of the discussion that we will do is on the foundations of DPI and the innovations of fintech. How can the banking industry really reimagine its business model? And how do we truly create value and reach segments which have not been reached before also? We just did a survey with all the banks, and 2 or 3 interesting statistics which came out, which is not very known to most of the people. On an average, a large bank, guess the number of fintechs that they have collaborated with has actually crossed 40 this time. This number was less than 10 before 2020. The number of, the TAT which a bank takes right now, officially as they report in the survey, is more than 60 to 90 days. So clearly, I think while, the number of fintechs have increased, but the TAT and the adoption is not certain great. The fintech side of the story is also a different story, right? I think if you talk to them, I think when we did the survey, they said it's not that easy to work with the banks. They don't open up their systems in a way that we would love to innovate. And obviously, there's a very thin line of the regulation which plays the role between balancing the act of innovation as well as what is permitted for a regulated entity. With that background, I think I must just open it up for the panelists. And maybe the first question, right? What are the biggest trends and disruption and innovations you all are seeing in the banking industry? And particularly where I think the banks have benefited the most from or are threatened. And maybe I'll start with that corner. I think with Nitesh ji, you and Kalyan ji, you have been at the forefront in the banks. Where do you see the biggest of these trends kind of coming from?
Okay, thank you. Thanks for having me here. I think as you rightly said, today not only in India, but globally if you look at, the technology is reshaping the world, and particularly with the advent of the general purpose technology. Across the world, whether it is Latin America or the African countries, the DPI is evolving. There are many countries which have taken the use cases with DPI. But I think India is very different in terms of the confluence that is happening here of the DPI, the fintechs, and the financial institutions. And as you said, I was also, while preparing for this session, looking at the few numbers that what this confluence has done so far. So like many of the numbers you are all aware, like PMJDY accounts, almost 545 million accounts have been opened in a record time. It has never happened in the world. We have 450 million UPI users. We have 180 million DMAT accounts, close to 200 folios for the mutual fund. Astonishing number. So far, there has been 100 billion times authentication through Aadhaar. India's population is 1.4 billion, and so far 100 billion times authentication has happened, and even the face authentication has crossed 1 billion times for the Aadhaar. So this is the massive scale that India has really achieved, and it has been possible because of the scale of the DPI, the interoperable character of the DPI that India has built. And therefore, I think few of the things which has resulted into by this confluence is that availability and the affordability has become much easier today. If you look at today the cost of acquiring a customer, it has reduced significantly because you have DPI, you have fintechs who are working together with the financial institutions to reduce the cost of acquisition, doing the KYC, doing the other verification. Similarly, whatever has happened, I think it's just the beginning. Because of what is India is going to witness in terms of the urbanization, demographic shift. I was reading that India is today the youngest country, and India is going to remain young for the next 33 years. And we have around 22, 23 years from now for the Viksit Bharat aspiration. So I think we are rightly set to achieve that. So another trend that we have seen and the disruption that we have seen is about the new revenue pools which has come across due to this confluence of the three players, whether it is embedded finance, co-lending, BNPL kind of thing. They may be today in the very nascent stage, but it is throwing up greater opportunity for the banks. The third area is about the customer experience. I think while today we are seeing a lot of focus from the regulator and the government about the customer service, I think this is being accentuated by the fintechs and the DPI, that banks are able to bring more focus on the customer service and customer excellence, while also addressing certain issues like the AML and the fraud risk. And if we look at total overall from the financial system and the banking system, the impact from the DPIs and the fintechs collaboration, as you rightly said, average fintech collaboration has increased to 40. Today, whether it is the asset side of the portfolio, liability side of the portfolio, or the wealth management, everywhere there is a fintech collaboration and there is a usage of DPI. Whether it is sourcing, whether it is onboarding, whether this is fulfillment and enrichment, there is a fintech and DPI. Whether it is a customer service, AML, risk and fraud, there is a fintech and DPI. So I think there are a lot many things which is happening today, and the future I see because of this confluence is very bright for the financial institutions, including banking.
Okay.
Yeah, thanks. Actually, I will take forward what Nitesh has actually placed before this August gathering. Certainly, if I have to say the major disruptions it is towards financial inclusion, today 80% we have achieved this part, and that is due to the reduction in cost. I was reading one article. Actually, it would have taken 47 years to reach to this level, which we have achieved in the less than 10 years. That is the power of this collaboration between fintech and DPI. Thanks to this DPI structure, the Jandhan what Nitesh ji was talking about, out of that 50 crore account, 25 crore accounts are of the female. You see the empowerment of all the segments of the society, which this collaborations has brought in. It has totally disrupted, if I can tell you, that first one is the financial inclusion. Second, in payment system, UPI, you see how it has transcended the developments even at rural level. We say India is actually, soul is living at rural places. By 2030, income is going to be doubled at our rural places. This technology has revolutionized there also. More than 61% growth is there in UPI at rural places. And another important aspect which I want to place here, the major disruption is the working style of the public sector setup. From out of my experience, I can tell you, you also told the average 40. Punjab National Bank being very a legacy old 130-year-old bank, we are having tie-up with the 60 plus fintech and having more than 117 digital products, processes, 60 plus the products, 35 processes and 15 plus portals. This is possible only when we have brought in changes in the structures. Organization structure has changed completely to focus on the different areas of collaboration, culture of cross-functional teams working, bringing all the stakeholders together. These are also disruption in the working style of an organization, and that resulted into such kind of how to manage the programs. 16,000 activities on daily basis. It is being monitored and actually being thought, which we could not have thought a few years back. That is happening, and result what we have seen actually, it is not only disrupted, but in coming times I am observing more disruptions towards customer centricity, towards capturing the customer's requirement in more hyper personalized way. And not only that, towards customer side, but also towards operational efficiency and cost reduction side also, fraud management side, and also the reconciliation, and also so many things, whatever new challenges are emerging, I am observing that these areas are going to be really very, very successful, giving us successful result for achieving our theme of this Viksit Bharat.
Yeah.
Thank you.
If I may request Rajiv, you from a private sector side, the same question, right? What are the biggest trends and disruptions you are seeing? I understand from a public sector context, obviously 60 plus fintechs and all, where are you seeing some of these trends?
Thanks, Anwar. I think, 10 years ago when we started working with fintechs, now called fintechs, but they were startups then, I think we saw them as people who were expanding the market, getting more consumer segments, B2B, and these are very traditional ways of doing business partnerships. So many of these partnerships, fortunately, have evolved into some of these guys becoming very large, very prominent, and many of them are getting regulated, which is a great, great sign. So the way we've evolved over the last 10 years, at least personally, that I've started seeing the advent of a new financial services player. Okay, I mean, so fintech is something we see which is outside the regulated engine, but I'm now seeing most of them actually want to see them as financial services player, partly regulated, partly still outside, but I think the clarity is there that if you're not regulated, these are the norms you need to follow, and as REs, we need to ensure we're working with the right. So there are three constructs which have now become clearer. And by the way, if I see my picture there, that's when fintech started for me, and 10 years later, I've acquired more wisdom. So the three ways I look at it is expanding client segments, and there's tons of stuff we are doing and everybody's doing. Second is, I would say, these are information service providers. So people who are helping us analyze balance sheets, account statements, the latest one being risk management, okay, especially around frauds, account opening, mule, where the RBI is doing some amazing work in building a common utility and we are also in the queue for testing. So that's the second one. The third, I think, is the more interesting one developing, is where these entities are now getting involved in light tech and core tech. I think something which I would never have imagined 10 years ago, that we would be willing to look at other ways of providing our technology structure. Because please understand, a lot of the technology which we use today has evolved over 30, 40 years from a simple branch automation, and many things have added on as platforms have changed. At some stage, you need to radically redo the technology. Otherwise, you don't get the power of new technology, which is why the younger companies, whether they are regulated or outside non-regulated, can actually disrupt you purely from their agility and their cost economics. Obviously, everybody has to do the right business under the rules. So I think this is, to me, the most powerful trend, which over the next 3-5 years will become more permanent, that I have seen many of us now looking to replace some of our traditional core tech, forget light tech, with some of these providers. And also what happens, Anurag, is that in the life cycle of entities, you do end up becoming a little smug, complacent. You know, that, I have got these customers, how will they leave? And that's the time these entities who already battle tested in smaller fintechs actually become much larger. And I'm happy to kind of share some names, but there are some very compelling platforms, including now incorporating AI approaches. I mean, I don't want to get into large language models because that's not relevant, but we're already testing a few of them out, seeing how they help us redesign our workflows, for productivity, for better use of our services. So I think these are the three ways we see it, and I think these three will evolve. The client segments are getting regulated under various guidelines of the regulator. The software or the information service providers, some of them are inside, like the account aggregators, the people who analyze the information, and some of them are still outside. And the third is the core tech.
Yeah. No, interesting. I think clearly DPI and some of these are getting very embedded. On that note, I think maybe I'll bring in, I think Mr. Suvindu Pati, the India's DPI stack, and I think the regulator is playing a very active role in kind of shaping that, right, has emerged as a very compelling foundational element on which many of these innovations are happening. I mean, how can the banks really leverage the DPI more? I was looking at the survey results. Interestingly, only 40 to 50% of the banks said that we are actively using a DPI right now, right? While I think everybody has experienced it, but do you kind of embed it in the journey? And also, I mean, from your perspective and Lalita's perspective, how do you see the DPI evolve, and how can the banks leverage it much more?
Yeah. Thank you, and thanks for having me here. And it's always great to come back to this event and interact. And yes, in India, I think the DPI, we started with three basic areas, targeting first identity authentication, and thereafter we went into payments, and thereafter we sort of focused on data sharing. These are the three larger pieces on which our DPI is built. And there are amazing solutions which are coming out of it. I know, if you do a proper study, how much of cost savings all these would have done resulted to individual institutions and economies. It will be really fascinating study. Similarly, if you simply look at the products like AEPS, serving the financial inclusion agenda, because of Aadhaar it became possible. Similarly, if you look at the BBPS or the FASTag, how much of FASTag would have added efficiency to the entire ecosystem? The kind of efficiency larger economy would have benefited. So these things are really shining examples, but they need to be scaled and taken forward. Another example that on the data sharing framework, we came out with our open banking model framework account aggregators. So this is again another data sharing framework which enables lending. And now, apart from this, in the account aggregator framework, I can share that we are trying to improve it further by working on the client standards and things like that. Of course, in consultation with all the stakeholders. So make it more powerful, make it more useful and robust. Similarly, we would also like, our philosophy is to, on the lending space, we are this new unified lending interface that RBI has, RBI through the Innovation Hub, we are piloting. And I am happy to report that around 38,000 crores of loans have been disbursed, around 7.5 lakh loans which have been disbursed. But this is just again a beginning. It's not just start of the journey. So we would like to see the DPI evolve into more fields, more areas where the banks and financial institutions can leverage and really benefit the country and reach, improve access, improve credit to the bottom of the pyramid. And that is something we are very keen to see. And going forward as a nation, I think we should now really think in terms of bringing a structured approach towards building a DPI. Planned activity. It should be really a top-down policy level think tank coordination across ministries, regulators, agencies, that when we bring in a real another DPI, that should really solve the current and future problems. And that could also serve a guide for the future. Let's say, and the beginning has to be like digitize whatever you can. Unless you digitize, technology cannot be used on top of that. So for example, if you simply just imagine you digitize your dispatch register, your debit card or credit card dispatch register, and there is a customer call, he says that I have not received my debit card, and if that dispatch register is integrated through APIs to your call center, immediately you can say it has been dispatched on so and so date, and you can receive it in 2 days' time. So simple things like if you start building, digitize anything, that's the first beginning step, and we would like, and that's happening. And through the ULI and through our engagements with state governments and others, we would like to see that the land record, for example, is digitized, the property registration data, they are digitized in the back end. A lot of these integrations can really come up with newer use cases. But as we go down that route, everyone should also keep in mind the trust in the digital ecosystem needs to be maintained, and everyone talks about the frauds, and in that direction we have also started an initiative through the mulehunter.ai, which tries to target the identify and prevent the funds transfer through through detection of the mule accounts. So I would, all banks would be encouraged to take a look at that. Secondly, in our recently concluded hackathon also, there was a focused theme on the identification of frauds. And there are solutions which came about, which talked about through the mule account transfer, how to retain the fund within the system very, very quickly, so that once it is retrieved, it can go back to the victim. So there are various ways we are trying to propagate or innovate on many of the things. But yes, I see the future very, very bright, and we should now, people are talking about building, today's newspaper, there is an article by Dr. Ravindran, who is part of our AI committee, that should we look at building an Indian AI foundation model, and that could serve as the next DPI, on top of which everyone else can work. So that is something we would be like, as a regulator, as a fintech department, want to support such innovations. We would be happy to contribute towards building those kind of data sets and data AI models so that others can work and innovate on top of that. I would stop here.
Thank you. I think, Lalita, if I may request you, you've seen it from the bank and now from the NPCI side. I think, where do you see the DPIs and how can the banks leverage it more?
So I think what has worked very beautifully for us is, of course, these railroads which have been set in place to take care of democratizing what used to earlier be a bilateral between, let's say, a bank and another entity, which was really a hard-working model. And I joined a bank at a stage when we were really physically signing underwriting paper. We used to go to the bank and verify that are these bank statements doctored or not. So we've come a long way from there. But I think it's not just the railroad, right? Now, the railroad has been taken in the form of an edible form factor to the consumer, which is a joint initiative of the fintech and the bank. Having said that, the guardrails behind taking care of the trust and the security have also been put in place by the regulator and the bank, right? So it's a lot of hard work and learnings that everybody has had, which has also been plowed back to make each of these railroads resonate to the customer with enough trust and audience. And I think all the big costs, which is like Mr. Nitish said, the cost to acquire, and like Mr. Pati said, the cost to serve, the cost to underwrite, everything has been taken care through these railroads. Hence, the ability to give small ticket size loans and the ability to even give things like purpose-based monitoring loans. One of the biggest risks that you used to see in personal loans is you don't know end use, right? Ability to monitor end use. All these have opened up a lot of use cases. And I was fortunate to be a part of the cohort which the RBIH team had put up on the ULI interface. We never thought that land records digitization could even be possible, right? And a KCC loan getting disbursed in minutes was like an unheard of thing. So everything is really coming in place, and also most importantly, I think the guardrails which are being put in place are extremely important, because I remember when the bureau started, we used to do quarterly reporting, then it became 45 days, then monthly. Now I think we've moved to weekly, and I guess very soon it's going to be real-time reporting, right? So all these are extremely important to ensure that we are walking the path of innovation with sufficient guardrails and fraud risks. And the recent most efforts in terms of fraud and mule and AI, where there's a federated model which is getting worked out with the banks, will provide us a great impetus to take the step forward. That's it from my side.
And from a bank side, Shalini, like the whole DPI stack, you're a big user of it, so would love to get your thoughts on the same thing.
Thank you. Good afternoon, everybody. Pleasure to be here as usual. I think most of the panelists have covered the broader aspects, but I'll just try to put it in the context. First, I think we take some of this for granted, Anurag. We have to recognize the fact that this country has made a whole host of progress on DPI. When Aadhaar was built, it was built for the public good. And today, I think we generally kind of, take it for granted that we will do our KYC through Aadhaar. We don't think about how it was created and how useful it is. So there is that ecosystem that has been created with the ministry doing a whole host of work to make it available, with RBI, the regulator, and I say this very often, and it's not because Mr. Pati is here, I don't know of any other regulator who has a fintech department and an RBI innovation hub, which is encouraging a lot of innovation. So that's another benefit for us as an ecosystem. The third is obviously entities like NPCI, et cetera, who have come in to do us a lot of good. So definitely, we live in an ecosystem where us as banks need to be cognizant of that and take that responsibly forward. What needs to be done within the banks, and this is something we've learned over the years, is first to start with what is the strategic objective you're trying to achieve. I don't think we should be using a DPI because it's available. It's not a solution in search of a problem, is what I say. It's what is the problem we're sorting. For us, it was very important for us strategically to expand our distribution beyond branches, and that's why we went into partnerships with fintechs where the underlying DPI is used. The second is to make sure that the guardrails, and Lalita referred to it, Mr. Pati referred to it, have to come in. We are the regulated entity. We have to ensure the guardrails are in place. The third is to make sure that you continually evaluate every partnership and what is the, customer value that is being delivered to it. So taking all this into account, and that's where DPI comes in. DPI is a means to an end, is not an end in itself, and we've got to recognize that. I'll give you two examples of how the bank has done this. One, I think it was alluded to by a couple of my panelists, and Nitesh is very familiar with this. Lalita referred to it. The digital KCC product that we have, which we did in Tamil Nadu and Madhya Pradesh, where we were challenged to say that a typical agri loan takes anywhere between 15 to 20 days at the very least. And with help from DPI, with help from RBI Innovation Hub, if Rajesh was here, I would say with push from RBI Innovation Hub, we brought it down to actually 5 minutes. And that would not have been possible if it was not for the whole Aadhaar framework. We've taken that forward into Gujarat, where we're doing work through a fintech with dairy farmers in Gujarat, which to get kind of self-help loans for them to buy the next cow and to buy the next, to invest in their ongoing maintenance, etc. And we're doing exactly the same thing, using DPI like ULI, Aadhaar, etc. So that's one great example where financial inclusion, gender, virtually everything comes to fore. The second is, over the last few years, we've moved a very large portion of our documentation to e-sign. It's only by exception where there are, certain exceptions that we do a physical signature of documents. The other day I was talking to a customer whose loan was getting renewed, and it was due for renewal, and he was in the US, and he was panicking, saying, how will I get my documentation signed? And I said, you needn't panic, because we do everything by e-sign. All you need is an Aadhaar and an Indian mobile number. You can be in any part of the world and the documentation would get signed. That would never have been possible if it was not for obviously the DPI as well as the fintechs. So these are just examples of where all of this is coming together and how banks like us need to play a larger role in understanding the capabilities that are available and taking them forward into the next level of modernization, next level of digitization, and next level of financial inclusion. Actually.
No, great. I think thanks for the specific examples, because that just brings me to the next question. I think those are great examples of how you use dairy loan or a KCC. But would love to hear, I think maybe Nitesh, Kalyanji, from all of you, I think are there any specific innovations that you all are driving, which has either enhanced the market or protected the risk or, created a better customer experience. But if I can have one examples of what all of you are driving for the audience, I think it will be very helpful.
One thing I will like to share, thanks for this opportunity. 2 examples I will give. First, for increasing market share, the digital lending space, I will give you, and also for liability side also, both sides. 3 years back, digital opening of account was 20% at PNB. Now it is 96%. And we are able to open more account. 1 crore, 20 lakhs account we are able to open as of March 24. I am giving you such kind of things. For digital lending in 1.5 years, we have crossed 26,000 crore of sanction. This is the reach which digital part is actually playing important role. Second, with RBI Innovation Hub, we are under tie-up with mulehunter.ai. And this has really gave us immense support in checking this kind of mule kind of fraud who are playing very important role in that side. It is with 94% accuracy. And the numbers of mule accounts have reduced significantly. So these 2 examples, I thought it will appropriate both the risk management side and also towards market risk side, which as an example of PNB, I gave in front of you.
Yeah. I'll just maybe add a different flavor. So we are actually big fans of TREDS. We think it's the most amazing innovation. It's got the regulatory sanctity, it's got the government sanctity, there's a lot of MSME behind it. So we tested it out like any normal user. Now we are taking it to the next level and to the next level to see how we build permanent capital for these entities, not the anchors, but S1, S2, and that can go international. So that's under testing for us. And there, actually working with the regulated entities which have been authorized by the RBI gives us a lot of comfort. So I actually think this is a DPI which is of a different sort, and I think in terms of just reducing our time to market and even getting the credentials, sometimes getting credentials itself is a big change. So you can start small and then you watch the performance and then you take it larger.
Interesting.
And then you can deploy your own people, no doubt, because when you want to lend a little more, you don't want to just do it faceless. But I think this just changes the cost of doing business dramatically. So a lot of our MSME strategy is anchored around how do you use information. And that could be TREDS, it could be other entities also which are more private. So that's one different flavor.
No, thank you. I think Niteshji maybe.
Yeah, so I think today we have many examples of this. But let me put it differently. So last time, I think when I was in the same panel for this event, I had made a statement, I remember, that in next 3 to 5 years, almost 50% of the non-collateralized retail loans will happen fully digital, almost a straight-through process. But today, I'm willing to revise that statement and say that even collateralized retail loans up to 5 crores will happen fully digital. That is the shift that has happened, and that has happened in 1 year. And that is because the example I can give that in Union Bank of India, today we are working on how to fully digitize the housing loan. And the key challenge 1 year back, that how do you deal with the valuation and the title search report. Today we have fintechs who are working with us, who are trying to solve this problem of doing the valuation digitally and doing the title search report. So I think that is the shift which is happening. Besides that, there are many products that we are doing. Yeah.
So if I can just add to what Nitesh is saying and taking from there, yes, retail housing loans tend to be the most difficult, I think, to digitize on an end-to-end basis. So, working with a partner on valuation, working with a partner on legal search, but also extending it further to what ULI is attempting to do right now, which is digitizing, as you said, the land records and the home records. Bangalore, for example, the government is moving towards all their B khatas and A khatas going digital. At some point in time, APIs will become available for bankers like us to use. So yes, there is a lot of work in that. But if I were to take it a little forward and with Mr. Pati's permission, talk about something which is, in the realm of innovation that we're working very closely with the RBI Fintech department on. So account opening for you and I, resident Indians, has become quite easy, I must admit. I don't think we've not faced too many challenges on account opening. But if you were to take it and look at our diaspora, and India has a significant diaspora across the length and breadth of the world, the account opening process is still fraught with a lot of friction. Unless you can do your original scene and verified, unless you, in some countries, they need to go to a notary and find a notary and sign. It's still fraught with friction. But we are working with RBI and with a fintech partner through a approved sandbox arrangement to see how we can secure the entire account opening process for a non-resident individual using video KYC. And that, I think, will, we are in the hackathon right now. We are in the sandbox environment, and we're working with a couple of countries in the Middle East which have already digitized one. This is very close to Federal Bank's heart, I must admit, because we are a significant player in the NR business. Nearly 7.5–8% market share, nearly 28% market share in Kerala on the NR population. So it's a very thing, but I think it's innovation of a kind which is going to be very different from what we've seen. Because if we respect our diaspora, we've got to make it easy for them to open accounts. We've got to make it easy for them to remit funds in. So this is another significant one where I do believe the DPI architecture, whether it's the PAN check, whether it's the video KYC, artificial intelligence capability, can be extended beyond just what we've already seen.
Oh, thanks. I think and maybe that brings me to the question, Mr. Pati, if I can bring you in. I mean, clearly there's a lot happening, and you can see the energy, the vibe. How can we do more? Are there any structural interventions, policy interventions that the regulator is planning to make sure that the momentum not only continues, but also, I think, deepens? I think would love to get your thoughts on that. And also on the other side, right, I'm sure there's a story on the fintech, and what do you want the banks and the fintechs to do as well?
Yeah, okay. We see a lot of these good developments, which is heartening to know, and all the banks have now, mostly all the banks have a digital unit, digital banking unit, and they do have some engagement centers to directly onboard fintechs and things like that. But sometimes during our sandbox process and things, we do see sometimes, because the banks, let me give you some examples. They do not have multiple UAT environments. So the product testing gets, stifled. The timelines get stretched. So that is one thing I would request, because this is technology, innovation, digitization. These are all things are going to stay for next all generations to come. So start investing in building those kind of capabilities and infrastructure which would support this kind of not only your own product rollouts, but also support innovations where you create a multiple UAT environment, and not only creating infra. It's equally important to have resources attached to those environments. And the tone from top has to be committed. Like what typically happens if you ask for another product rollout or a new innovation to come, no, sir, our own app is getting, redefined, it's getting updated, we have to roll out, that's a priority, not this. So my suggestion is that practical approach is that both should go concomitantly. You should have enough resources, enough infra, and this is something that board and the top management has to strategize, give the commitment. You cannot, always when we interact with the middle level or the lower level people, they keep shifting their priorities depending on the tone from the top. So that is something, one, I want people to take notice and build, strategize for the future. Dedicated innovation verticals, this is something we would like all of you to, build. Think technology 10 years ahead, not immediate future. So AI, for example, is everybody is talking about, but how many are really prepared to embrace it? How many are really prepared? How many people in the Indian banking boards really understand this AI? How many do we have banks which have taken this AI risk as part of its product approval process? Do you really look at the various risks that it may throw when you embrace or inbuilt into your models? So these are really larger questions one need to think through from a broader long-term strategy, but at the operational level there are also needs to be, I would say that banks should, talk about building a sandbox environment towards technology. So build innovation capabilities, being sandbox capabilities within yourselves, which do not require regulatory relaxations. And start doing things and embracing things, and things would improve. And of course, in all this, the digital data protection rules have come in place. Rules now, after they are crystallized, really the games are going to be reset for many things on the partnership front, existing partnerships and the future partnerships. So those again needs to be thought through and redesigned and rebuilt. But from our side, we are doing whatever is possible through the like sandbox environment or the hackathons and any other things, but we would be happy to engage with the larger ecosystem to build further, add further innovations to this space, and we stand committed in all of our endeavors. For example, I would like to see some innovations coming in the areas of, say, collections. I don't think we have innovated enough on the collection side. Think about micro loans when you are going out for collections. Can central bank digital currency, which is a substitute for cash, can that be used as a collection mechanism? So those many of those ideas you can really think, and I can announce shortly we are going to engage with banks only to generate ideas for innovation. So I take this opportunity to sound out your CDOs, CTOs, or entire teams to come up with proposals which need resolution and solutioning. So we will engage shortly, and that would, and just be free and ideate. Don't get out of from your daily mundane tasks of firefighting and managing things. So devote some time to ideate. Thank you, but I am really very happy that Indian ecosystem is something the world is also looking at. So we need to really live up to their expectations as well as apart from solving our own problems. Thank you.
Yeah, I think we are also kind of out of time, but I want to maybe just open it up for one or two questions for the audience, if that's okay, because there's a specific request from a lot of you. Maybe keep it very short, last closing comments and one or two questions. Do we have anybody in the audience who would love to kind of engage and ask anything?
दूसरा mic. Technology.
Please. So I wish there is some technology to read his mind and answer.
Yeah. Maybe I can do that, I think, for him.
Should we give you one of these?
Yeah, this one's working. If. Yeah.
Good afternoon, everyone. My name is Bilal Siddiqui. I am from Central Bank of India. One of the participants was mentioning about housing loan digital journey. So I would like you, sir, to a little bit elaborate on it. Is it completely STP journey or is it in a physical mode, what you were mentioning?
Maybe I think, yeah.
I can, Anitesh, please add to it. I can take that. I think what I mentioned was the fact that that's one of the products that's taken the longest time to digitize, because of the simple reason there are a lot of legal and regulatory ones. So in our bank, we've gone to a stage where a part of the process has been digitized. It's not completely digitized. So we do the valuation, for example, is now completely in a digital flow, which means the information goes to the valuers. The valuers do what they need to do, upload the reports digitally. The credit analyst looks at it digitally. The legal piece is also in the process of getting digitized with a fintech partner, which is again the legal checks that need to be done in the bone. But there are still some parts of the process. For example, the equitable mortgage creation, the EM creation is still a little bit manual, but there are advances being made. ULI is looking at it, Unified Lending Interface. I know some governments have done a lot of work to digitize because the records are ultimately with the SRO, right? So you have to go there. So it's partly digital at this point in time, but still some more work to be done. Having seen the success on agri loans in certain states, we do believe there is a path to digitizing this also.
Thank you, ma'am.
Any other questions? Last one? Maybe.
There's one here.
Oh, sorry.
Thank you. Hi, my name is Sapan from Legality. I had a question for all panelists, actually. So one of the things mentioned by Pati sir was in terms of AI. So my question is, what is the risk appetite of banks today to adopt AI-enabled solutions? I know some work is happening on the chat side of things, but in terms of risk profiling, credit scoring, maybe end-to-end deploying AI in internal systems, what is the risk appetite today, or what use cases have you seen or explored in terms of AI? Would just love to hear.
I'll just take that. I think what we are doing is right now using it as a productivity and a lot more than just the automation we do right now. We have not embedded that into our risk score. We also want to see the development of, I think one of the points is how much of your data is digitized. How much are you ingesting which is digitizable, and then validate that and see how your models evolve. And I think one of the most important things is this should not lead to a bias. Right. That's the other problem with AI models, is that it just becomes very bias prone. So right now our focus is frontline automation, processing, and certain specific areas which are actually quite laborious, and where specific AI tools can become very highly productive and better impact from a customer service perspective.
So I would just like to supplement. See, overall, what we are witnessing among banks is mostly on the customer engagement side, which appears to be a low-risk area and easily manageable area because of the models that are typically available. But as far as the more sensitive areas concerned, for example, credit decisioning or classifying something as a fraud, or more sensitive areas, there needs to be more sort of solid approach after testing. Because one of the things that challenges posed by AI is explainability, accountability. Right. You just cannot leave the outcome to something which is done by some model. Ultimately, the entities need to take responsibility for their own actions. So therefore, there is a little bit of, although it may be used as an aid or tool as in the entire process, but there has to be something like human in the loop in the end. And that is something most of the banks are experimenting. And if you would have watched our previous monetary policy statement, we have announced a committee on the responsible and ethical adoption of artificial intelligence in the financial sector. So the committee is examining that, and it is expected to submit its report in 6 months' time, say sometime in July this year. So therein we would have specific prescriptions or guardrails recommended with regard to what the financial sector needs to take notice of, or has an ecosystem, what are other key enablers that may come around for facilitating innovation at the same time. We should be prepared to take advantage of this as well as the guardrails that need to be put in place. While most of the existing regulations, for example, through our outsourcing guidelines or through the customer master direction, customer service master directions, the general principles or risks are addressed to an extent, like customers should be treated fairly. That's a very, very overall statement which cuts across technology. Right. So these are technology neutral regulations which are already in place, but more nuanced and specific regulations, if required, that would be examined by the committee which is set up by Reserve Bank of India.
Thank you so much. Very helpful.
No, thank you. I know we are kind of out of time, but if I may summarize, I think there's a lot of momentum. There's a lot of energy as well as innovative use cases which have come. Clearly, the next 2-3 years is also going to be finding the right use cases. I think you all mentioned about some of the more difficult ones, right, where we are either enhancing a market or like in home loan example or even international corridors or fraud risk. So the next 2-3 years, at least what I sense from all of you is about finding those innovations in a protected guardrail environment. Like Mr. Pati said, build those sandboxes, protect yourself. Maybe possibly that's the only way I think you'll kind of adopt more. But thank you, I think, for a lot of very interesting insights and the thoughts. And I think that's something that we have for today. But thank you.
Hello. Thank you very much for the effective and insightful deliberations. Can we request you to wait for a group photograph? Yeah. Thank you again, panelists, and thank you. Thank you, Anuragji. Thank you. Ladies and gentlemen, we've had an engaging and insightful morning session, and now it's time to break for lunch. We'll meet again at 1:50 p.m. for the next session. I request MC members, MTs and EDs to proceed to the Lotus Hall, which is one level below. All other delegates can please join us in the hall which is adjacent to the Expo Hall. Thank you once again for your participation, and we look forward to seeing you after the break for another round of enriching sessions. Enjoy your lunch, and please do visit all the 14 booths and drop your visiting cards in each of the 14 booths. We have 14 lucky prizes today.